Excel accounting practice problem. Short-term investment, sale, and recording of related gains transaction. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the Excel worksheet from a blank sheet. Now we're going to continue to enter transactions into it. If you have access to it, there's two tabs on down below, an example tab and a practice tab. Practice tab starting out where we left off last presentation. Example tab in essence being an answer key. Let's take a look at it now. So we're going to be thinking about when we first started our business, we put money into the business from ourselves, the owner, and from a loan. We used that money then to buy inventory and furniture and equipment that we used to then generate revenue. And we took some of that money, put it into this short-term investment, parking it there that we were planning on using it in the future in order to generate revenue. So a couple things just in general with the short-term investment. Remember that this company is not in the business of investment income. We're in the business of guitar shops, selling guitars and so on and so forth. And if the business is not in the business of investment income, like dividend and interest income, then generally you might put it there as a short-term investment until you're going to be basically selling it to purchase something for the business like equipment and inventory. If you have excess cash and you're not planning or you don't need it for expansion in the near future, the idea then would be that you give it to the owners so that they can then use it to generate revenue in some other way, shape, or form. That would be the general kind of concept. Now, if you're in the business of investing and or if you're holding on to a short-term investment and you're not in the business of investing, or if you're doing your personal bookkeeping, you have some other issues with relation to the investments. One would be, should I break out the different kinds of investments on my trial balance and financial statements? And generally, you want to have a few, not too many categories of the types of investments that you have, but rather kind of group them together, because oftentimes when you display, you're going to be displaying on the financial statements your grouped up short-term investments, and then possibly think about having a subsidiary ledger or another kind of, company, your investment company or broker helping you out to give you the more detail to support that number. Also, if the number increases and decreases, hopefully it goes up over time, and you don't sell the investment, the question is, should I be increasing the investment to the market value as time passes? And generally, periodically, you're going to want to probably try to increase it to the market value, possibly monthly, whenever you get your statements and so on. And as that happens, if you increase it, say, to the market value, say it went up to $12,250, and I increased it to $12,250, but I did not sell it, having not realized the gain, where does the other side go to? You could post it. There's a couple different options, and there's a accounting courses that you could see that will get down to the rules of generally accepted accounting principles on it. But just in general, the two general options would be, one, you can increase the income statement down here. You could record unrealized gain actually on the income statement, which would be the easiest thing to do. And then you might record it down below, not as part of the normal operating income if you're not in the business of that type of income. Or you might say, hey, look, I'm going to record this at cost, maybe create another account here, which I'm going to call unrealized gains and losses related to it, kind of like you have down here on the equipment, where you have two accounts that represent the total balance. And then the other side of that, you could put down here in the equity section, so it doesn't affect the income statement because you have not yet realized the gains and losses. They could go up and down and so on. You haven't locked them in until you realize them. So you would have an equal and opposite account down here as you would have under the investment account. And then when you sell it, you just match out those two accounts to sell it. So those are the general two options that you can think about when you're tracking unrealized gains and losses that you want to keep in mind. We're going to imagine that we're selling the item here, so we're actually going to realize the gains and losses and put them on down below as gains on the sale. So let's go back to the practice tab and do it. We're going to do some cleanup work. I'm going to copy my two ending balances on the left-hand side. I'm just going to copy that whole thing, and I'm going to put that in my beginning balances for the two beginning balances, pasting them 1, 2, 3 values only. Then I'm going to delete the activity in the middle column so that we can just start off and have a clean worksheet, and the detail is still being recorded on the GL. So now let's say we're going to imagine that we sold our investments now because we're going to use the money to buy more equipment and inventory and so on. We're going to say that we got the checking account is going to go up by what we sold it for. We're going to imagine $12,250 is what we sold it for. The investment needs to go down. The investment is on the books for only negative $12,000. So we're going to reduce it by what it's on the books for. Otherwise, we'd have a negative $250 in the account. That wouldn't be right. It needs to go down to 0. I'm going to increase this cell a little bit. The difference then is going to be a gain or loss. In this case, it's a realized gain. And so I'm going to say negative sum, my plug formula. There it is. I'm going to put that gain on the bottom of the income statement because it's not part of ordinary income and expenses. So I'm not going to put it up here in the income line items because it's not in alignment with what we do as our business as a guitar shop. It's other income, which I'm going to put at the bottom. And this will become more clear when we see it as we add it to our income statement. But I'm going to put it right above the interest expense. Right click and insert and shift the cells down. That looks good. So then we're going to put it right here, and I'm going to call this gains on sale of investments. I'm going to widen this column a little bit, and we'll start it out at 0 and 0. It looks like the totals have then given me the proper formulas on this side. That looks good. So we're going to say this is going to be equal to that gain on sale of investments. We'll indent these bottom two, alignment and indent, and there we have it. Let's post it out, see what happens. Checking account should be going up. Let's go on up to the checking account in I4 equals. We're going to pick up that $12,250, both the Feb and the year to date doing the same things because we're on the balance sheet side of things. Short-term investment is here in I9 equals the 12,000, both going down here on the balance sheet. And then we've got the gain, which is going to be down below in I27 equals, and we will pick up that 250. And you can see then that's going to be an income. If we're looking at just February, this is all the activity we have thus far. We still have a loss of the 346 thus far. If we're talking year to date, January and February, this is where we stand for the year-to-date numbers with regards to the income statement accounts and net income. Let's post it on out to the GL now. We got the checking account. Checking account GL is right here. We're on M7. We're going to say this happened on 2/2. So in N7 equals, we're going to be picking up that 12,250. Balance at the 86.94 plus the 12,250 to the 98,344. 98,344 matching what's on the trusty TB. Short-term investment, that's going to be like the third to last account on the asset side of things. So we're looking for the short-term investment. It looks like it's in AC5. So we're looking 2/2 AC5. AD5 is going to be equal to left to the wall. Scrolling down, picking up the 12,000, bringing the short-term investment down to 0. Now we're out of balance by the 250 until we record the last component, that being the gains and losses, or the gains on the sale. That's way at the bottom, and we're going to have to add an account. We're going to have to add an account to do that one, all the way to the right. So I want it to be above the interest expense, but after the utilities. So I'm just going to move this one. I'm going to take it. To move it, I can say Control X or cut it. Same as just kind of grabbing it and moving it and putting it down here and just paste it down there. And then I'm going to copy it, Control C, and put it right back up top so I can get the formatting up top. Delete this, delete that, delete this, delete that, and then rename it equals. We're going to then pick up that account that we added, which is going to be the gain on sale of investments. So there is that. And now this happened on 2-2, so we're in BN 5 equals left to the wall. Scrolling down to the last one, the 250. So that looks good. Then we need to add that to our check figures to check it, because it's not in our check figures yet. So I'm going to add it to these two check figures. 250, double clicking on it, going to the end of it, plus picking that one up in my check figure to check it out. Make sure everything checks out the way it's supposed to, giving it a double check. There's the 250, back in balance there. Then we're going to do the same thing for this check figure, tying us out to what's on the income statement for net income. And so we'll pick that one up. We're missing that 250, picking it up there. So there we go. Now that 7071 matches my year-to-date number at the 7071 as well. So everything looks like it is tied out at this point in time. This is where we stand with regards to our ending numbers. You can take a look and see if everything's the way it should be. It's going to be the same down through the liabilities for both columns, and then you see the difference happening on the equity side of things for the month of February. This is the only activity we have thus far with the income statement.